And welcome back, everybody, to Double Down with Breslo, where we cover the world of the business of sports betting. I always get tongue-tied on that one. Jim Breslo here, your host, and we've got another great guest, somebody who's a true expert in everything that's going on in sports betting in the U.S., especially with the publicly traded companies. Things have obviously been blowing up in the U.S. and have a long way to go. So which companies should you be putting your money on? That's what we're going to be talking about today with Jordan Bender. He is a senior research analyst with Citizens JMP. Welcome to the program, Jordan.
Jim, good to be here.
Thanks for joining. You're coming out of the great city of Chicago, where I spent 3 years in law school and loved every minute. I did 3 winters there. I never got to enjoy a summer there. It took me about 10 years to realize that, oh my gosh, the city is amazing in the summer, because I finally went back and visited about 10 years later and saw it in the summertime. And it's kind of the best city in the world in the summer, and not too shabby in the winter either.
You know, I would think you should probably have done summer school and, finish your law degree that way. But yeah, it's a fun city. Can be cold during the winter at times, but it's a great city in the spring and in the fall and really the summer too.
And a pretty good sports city. I've been watching the Chicago Bears, what do they call it? The HBO show?
Hard Knocks.
Hard Knocks with the Chicago Bears. Are you watching the show?
I'm not a huge Hard Knocks guy. I feel like these days it's hard to get in front of the TV and watch anything, but with football season just a couple of days away here, it's a time of year to kind of plop yourself down on the couch and watch some good games though.
Yeah, I used to absolutely love Hard Knocks. It's probably in about its 10th year now. I mean, it's been a huge success, and now they do 3 Hard Knocks. There's the off-season Hard Knocks, then there's the preseason Hard Knocks, and now there's the in-season Hard Knocks. And it's just kind of getting a little repetitive at this point. It used to be super exciting to kind of get behind the scenes of training camp, and after you've seen it 10 times, it kind of gets a little less interesting. But the show seems to be still going pretty great. But I imagine people in Chicago are probably pretty excited about the Bears getting covered, because I think it's the first time they've been on any of their shows.
I'm not from here. I obviously know a ton of people from here, and it feels like, every year it's the Bears year, and every year it's not the Bears year. And I feel like with Caleb Williams here in town now, it feels a little bit different. But again, we need to see how it actually plays out here. But there is definitely a lot of optimism and excitement around his arrival here.
Yeah, and I think his preseason performance, has kind of been pretty good so far. It's got people pretty excited. The one thing they talk about on the show that I wasn't aware of is a brand new Bears stadium. I don't know if you're tracking that story or not. I mean, Soldier Field has been there forever, but they're in the process of planning to build a new stadium.
Yeah, it's I actually covered Churchill Downs, which originally owned that Arlington race course. So they sold that a couple of years ago, and it was kind of this interesting idea. They move out to the suburbs. Everyone here complains about going into the city and getting to the stadium and how much of a pain it is. And it just feels like, that was so long ago, and it'll probably be talked about for a little bit of time here. And it feels like it's going to happen. It's going to not, but give it a couple of years and we might know an answer to that.
Well, I mean, in the show, they're like picking the chairs that are going to be in the various suites. So they definitely appear to be quite a bit down the road, but you're saying it's not going to be downtown.
Well, if they switch locations and they go out to Arlington, it's about 25 minutes west of me. It's about 45 minutes northwest of the city. So a little bit easier for the people in the northern suburbs to get to. You can drive there. You don't have to take the metro or the train downtown and Uber and bike and however you get other ways to the stadium. But
and is that a shut down racetrack?
Yeah, it's not operating right now. So the Bears own the land. It will be torn down for demolition. I think they might actually add residential there as well. Again, it's been a little bit of time since Churchill Downs sold that, and kind of the ideas of what will and will not go on that land. But if the city gives the team tax breaks down in the city, who knows what's going to happen ultimately with that parcel of land. Someone else can come in and buy it, but we'll see.
Yeah. Well, the expansion of the business of sports betting in the U.S. Has been pretty spectacular, but there have been some losers in it, and probably horse racing kind of fits into the category. I mean, horse racing was already kind of not doing well and heading down, but now that you can bet on sports and sit at home and watch them and bet on them, it seems to me probably fewer and fewer people are going to the track. And I know here in LA, we lost Hollywood Park. Now Santa Anita, one of the most iconic racetracks in the country, looks like a possibility that it could be sold, and I don't know if it'd be shut down or not. But do you track the horse racing business much?
Yeah, I'd say there's kind of two different sides of the horse racing business. One is actually in person or retail, going to watch a race, betting in person. And then the other side of it is online horse wagering. The retail side of it has been in kind of a cyclical decline, to your point, for a number of years and even decades. Revenue for wagering continues to go down year after year. And especially during COVID, when some tracks were shut, but people had no other way to, if you want to say, gamble. That was kind of when sports betting was taking off. People actually found horse racing online, and you kind of saw a boom during COVID. So if you think about the total pie, it kind of shrunk. It's shrinking for the retail side of it, but growing for the online side of it. So it's kind of a stable industry, but a lot of these tracks are struggling. People aren't going, they're not selling concessions. But when you tie that back to sports betting, how does that fit in? It's not necessarily the same customer. It's, an older customer that's betting on horse racing, but the idea here is offer whoever's coming onto these platforms as many ways to bet. So, DraftKings has a horse racing app, FanDuel has a horse racing app that, those parent companies can cross-sell all these types of people between horse racing and online gaming and sports betting. So it fits in and it folds into kind of the overall ecosystem, but under the surface, part of the horse racing industry continues to struggle.
Yeah, well, it's an interesting in that it's kind of a hybrid business, that it is both the sport and the gaming product. They kind of have it combined to some extent. I mean, historically it's been combined. The guys that own the track are the guys that also own the book. Unusual compared to sports betting that we think of. The Chicago Bears don't have their own sports book, although who knows, that's probably coming soon. But for the most part, the teams themselves are just putting the product out there, and then other people are taking the bets on it. Horse racing kind of combined the two, which I think ultimately has been its downfall, because live sports is just taking off like crazy, right? The value of these franchises is just taking off like crazy. I think, frankly, sports betting has helped that. But primarily it's been, I think, the boom of streaming, and people aren't seeing commercials anymore. And these streaming networks, in order to get people to sign up, if you throw a couple NFL football games on there, suddenly everybody has to have Netflix. And it's just driving the value of these franchises higher and higher. So here's horse racing sitting there going down, while all other live sports seem to be going up, and no one seems to have a solution to it.
Yeah, you kind of have to look at, kind of the profit and loss statement, or, the income statement of what horse racing actually is. And I think the perfect example is the Kentucky Derby. Everyone knows that at Churchill's Down Racetrack in May. That race within itself drives a massive amount of profitability for a company like Churchill Downs, but that's only during that 1 week of the year. And that's the 1 week of the year they make essentially all of their profit. The other 51 weeks of the year, it's either a break even or a loss-making business. But you're running those races out the track to, for people to go online. And I couldn't agree more to your point of, it's all about eyeballs on the sport. And, as this middle-aged consumer starts to age higher, and, horse racing sticks with that, and those people start to go away, people my generation, even in their 20s, 30s, 40s, they're not betting on horse racing necessarily, they're betting on sports. But the more you can get eyes on, whether it's a horse race or a sports game, that's what's driving traffic to a lot of these sites. I think a good example of that also is the Olympics. Olympic wagering, our sports betting, isn't a huge part of a DraftKings or a FanDuel business. But if people are watching and you have that one figure that everyone knows, or if it's the Triple Crown that that one horse keeps winning, you'll get more eyeballs going into that race or that sporting event. And that's what drives incremental, whether it's wagering on horse racing or sports betting. So I think the media aspect actually is a huge part of it that, over time, that's what a lot of these companies are talking about is, we want to integrate more of the digital and the media aspects of people are using two screens, watching their TV, watching their phone, betting on their phone, just kind of integrating this whole ecosystem so it grows the overall pie of wagering revenue.
Yeah. Yeah, they need to leverage that Kentucky Derby somehow better because, like you said, it still gets a big audience both in person and on television. What I've always said is, it seems to me that needs to be the Super Bowl, and there needs to be a regular season that leads to that Super Bowl, and then a playoff that leads to that Super Bowl that causes people to watch leading up to it. Because right now you watch it, and it's the first time you've heard of these jockeys and horses and trainers. People need to already have been aware of them, but somebody needs to put that together, and I hope it happens. Well, let's get more to the traditional names in sports betting. Everybody talks about DraftKings and FanDuel being the two gorillas out there. Is that do you see anybody coming up to challenge them, or do you see in the foreseeable future it's going to be those two as having the lion's share? Which I'm just reading one of your reports. According to your reports, between the two of them, they've got 80% of the market.
Yeah, I think if you separate sports betting and traditional iGaming, so slots and tables on your phone, FanDuel and DraftKings are the 500-pound gorillas in the room when it comes to sports betting. And, a lot of that was formed. They just had the time advantage. Essentially, when they formed, they had the fantasy database that when sports betting legalized back in 2018, they were able to cross-sell a very like-minded sports bettor or a fantasy player into sports betting. And their technology, which is a huge part of the operation, they've always been ahead of everyone else. So, as we get to the football season here in 2024, it feels like, every year it's who's going to knock DraftKings and FanDuel, out of the way or take market share. And to this point, no one has been able to do that. Combined, they're close to 80% market share. Every season we preview the industry and we say, who is what company is going to take market share here? Who has the best opportunity? Normally that kind of fits into two buckets, and it's the mid-sized companies like a BetMGM or a Caesars, and then there's the smaller companies, Bettor or Prize Picks even, in terms of what kind of differentiated product will they come to the NFL season this year. And as we kind of look and we preview this season, we think a lot of the smaller companies, there's just a lack of momentum. DraftKings and FanDuel are really just pushing more people out of this industry. It's expensive. It's very expensive to compete and operate. So with the scale they have, a lot of these smaller companies, we don't think are going to be able to compete, at least in this upcoming season. So we look to the mid-sized companies this year. Caesars, BetMGM, ESPNBet is the big one launching here or relaunching into this football season. A lot of capital and investment is going to be pushed into this industry in September and October. And, this is the time of year. A football bettor in week one is the type of customer that you want to acquire for the rest of the year. That Super Bowl bettor, they're going to show up, they're going to bet their $200 or whatever it may be, and you're never going to see them again. So a lot of these mid-sized companies, we think, are going to be coming after DraftKings and FanDuel. History tells us it's going to be extremely hard to knock these companies out of their way. The stat that I came up with or that I found here was no companies ever gained more than 2 or 3% market share since New York launched since January of 2022. So, that's outside of DraftKings and FanDuel. So it's incredibly hard to kind of move those two companies out of the way. And that's what we're going to be watching here into football season.
So you're saying these companies that are going to try to make a move now, like literally now is the time they're trying to make that move at the commencement of the college football and NFL seasons. That's the time. If you're going to grab players, you want to grab them now.
Yeah. And, I'd say literally as we're speaking, this is kind of when it gears up. Every year, there's been a mass legalization since 2018, as you know. Every year there's been new states coming into their first football season. And this year, only North Carolina has not had some form of football season. You've had, Kentucky and Vermont, they launched during football season. But, if you're DraftKings or in your FanDuel or your BetMGM, you're looking at all these new players, the most attractive players are coming now during football season. So, focus is going to be on new states like North Carolina. It's also going to be focused on reactivating players. So players who only play during football season, who, go away during NBA, NHL, NBA, you have to go spend to get those people back. And you have to say, knock, knock, here's $20, come back and bet. And it kind of gets that cycle going again. So that's reactivation spend. And then the last bucket here is existing states. So the New Jerseys, the Marylands of the world, the New Yorks that have been live for quite some time. A lot of those players are going to have to be reactivated, or they're going to look to new players in the states that have never downloaded DraftKings or any of these sports betting apps. So this is the time of year, like I said, as we sit here today, that these companies are going, what's the marketing campaign? What new products and promotions are we laying out here? Because again, you acquire someone now, they have the longest long-term value of any customer all year, essentially here in week 1 of NFL.
So who do you like best of the other players?
So my top pick and my favorite company here is Flutter, which is actually FanDuel's parent company. They have a lot of other business outside of the US, but FanDuel has about 40% market share in sports betting, another 24-25% in iGaming. That would make them the largest company here in the US. For me, it's about the size, the diversification, the ability to invest, being tied to a larger corporate enterprise. They have a lot more capital to invest. They have better systems. They have a global footprint, and they can say, what do we do in Australia or UK, some of the more mature markets across the globe, and how can we take those businesses and maybe sprinkle that in and apply it here in the US? So from that perspective, it's the scale that I think matters. From a retail investor perspective, if you're looking at this, the only real, there's kind of 2 ways to play online gaming here in the US with only US exposure. That's going to be your DraftKings. That's, in my opinion, I like the name. It's just higher risk, higher reward. You're very tied into what does market share look like, in September and October, and what does that mean for profitability? They don't have that necessarily diversification or geographic diversification, but we like DraftKings here also into football season, just given it's the number 2 market share player. Again, there's kind of these mid-scale companies. We look at Caesars, we really like them into football season. They've made adjustments to their business model. We like that way to invest in the space. And then, like I was mentioning, BetMGM, they've also made some adjustments into the NFL season. They're going to be spending more. They've kind of took a step back in 24 to invest in the business. We'll start to see what they roll out here. So I'd say those are kind of the high level. And then the last one here is ESPNBet. That is the big shiny object in the industry right now. Penn, they bought Barstool a couple of years ago. They sold it back to Dave Portnoy last year for $1. They signed this massive marketing agreement with ESPN. They rebranded as ESPNBet. And this is kind of the first season where they're under the ESPNBet name, but they're also integrating more into ESPN in general, tying the fantasy, your ESPN fantasy team into your sports betting app, being able to bet that way, see what your players are doing. So that's going to be a big one for us to watch here. We're a little more neutral on the name. We're a little bit more skeptical on their strategy, the amount they're investing here. But, come September, I guess right now, and come November, that's going to be the one that people are going to have their eyes on.
Mm-hmm. Now, those other online companies you're mentioning, Caesars, MGM, ESPN, are those distinct entities where all it is the online segment, or are they lumped in with Caesars Hotels or ESPN, the network?
Yeah, so those are all part of, Caesars has, footprint in Las Vegas, one of the largest operators in Vegas. They have a bunch of brick and mortar regional casinos. That's the same company. The strategy for a lot of these companies post-PASPA was, we have a database of all these casino players. We are going to be able to cross-sell our players who go into Las Vegas and go into our regional properties. We'll be able to cross-sell them into our online sports betting app. And that's why you're seeing a lot of, traditional brick and mortar casinos, MGM through BetMGM, Caesars, and then Penn. I mean, Penn is also a massive regional gaming company. That was kind of the whole pitch, is they'll be able to get all these players into the online app and then get people from online into their brick and mortar casinos in Vegas and regional markets. So these are all part of the corporate structures. Again, they're tied to massive balance sheets. They're tied to databases. I'd say when you bucket it, it's DraftKings and FanDuel, and also this company, Rush Street Interactive. And then on the other side of it, you have more the traditional brick and mortar companies where, they have all this profitability and EBITDA generated elsewhere, where the online business is just, at this point, a smaller part of the overall enterprise. At some point down the line, from a profitability perspective, it'll grow to be, more than, a quarter or even a half of their profitability.
Right. And so like ESPNBet is owned by Disney, I assume.
So ESPN is owned by Disney, but the online enterprise, Penn Entertainment, that's a regional gaming company. They're the ones that are actually operating this. So they're essentially, they're licensing now, or they have a marketing agreement with ESPN for the name to essentially cross-sell the ESPN database into the online sports betting app.
So the purest play for U.S. sports betting would be DraftKings then, right? Because they don't have any brick and mortar. They don't have anything international. It's U.S. sports betting.
Correct. If you're looking for a pure play U.S. online sports book and iGaming, that DraftKings will be your play here.
And considering that, we know California hasn't happened yet, Texas hasn't happened, and, a handful of other good-sized states, isn't it essentially a no-brainer that this market is going to get bigger and bigger, and therefore these are a good investment? DraftKings, for instance?
Yeah, so you saw a huge push for legalization on the sports betting side of the business following PASPA in 2018. And we're close to about 60% of the US population has access to online sports betting. Some states actually have retail, so you go into a casino, but they don't have an online app. The three big remaining ones are two. We can kind of talk about the third, but California and Texas don't have online sports betting. And a lot of this comes down to politics and lobbyists, and who has interest in the states, who wants it and who doesn't want it. California and Texas, for various reasons, haven't gone down the path of legalizing online sports betting. We can sit here and talk about, well, the states around them might have it. People are going over state lines. There's a lot of lost tax revenue, but those states just haven't budged, and those are big portions of the population. Florida actually has online sports betting through Hard Rock. That's a monopoly. A DraftKings and FanDuel at this point can't go into the state. At some point down the line, they might be able to. But the thought of all this will come at some point. From an investment point of view, we don't know when. It might be in 3 years. It might be in 20 years. We just had such a fast rush of states do it initially that we're kind of sitting here today being like, well, what's next? What's next? And some of these states with brick and mortar casinos, it took them decades to actually legalize. So we could be sitting here in a scenario where we might not see another state legalized for a couple of years. So from that perspective, growth will start to slow down a little bit. What we haven't talked about is iGaming. So slots and tables on your phone, that's a huge part of the business. It's a highly profitable part of these businesses. Very few states have gone down that route. It's kind of viewed as legalizing a casino within the four walls of your home, for various reasons. States just haven't wanted to do that yet. There's been a lot of push for sports betting. A lot of the legislators don't want to look at iGaming quite yet, but that's another lever of, if you're investing or even looking at the industry, at some point we're going to get more of it. It's just a matter of when. And that's just, we look at our estimates and we see how fast are these companies growing. We just don't know when that next wave of legalization might come.
Mm-hmm. Let's talk about a couple of the states that have implemented iGaming, basically casino gaming in your home, on your computer, on your phone. Aren't I correct that the states that have done it, the revenue from iGaming far exceeds the sports betting?
It's about, out of $100, $75 of it is iGaming in a state. So in Jersey, Pennsylvania, Michigan, Connecticut, West Virginia, iGaming comprises, like I said, 75% of the overall gaming revenue in a state. So within that, those customers are stickier. They stay on longer. They They hang around. You don't have to give them as much promotions and free money. So for these companies, DraftKings, BetMGM, they want more iGaming because it's a much more attractive business model. There's not as many costs involved with it. It's very recurring. You just get people on and they come back and play. It's just, like I said, states haven't gone down that route yet. There's the questions of, does iGaming, cause cannibalization? So states that have brick and mortar casinos, are people now going to split their time online versus in person, or are they just not going to show up to the casino anymore? It hurts some of these smaller casinos. If you're an MGM, well, now you can say we can have those people online and in person, but that's part of the issue. It's a massive tax generator. I think a lot of states haven't looked at that yet because budgets have been pretty good. That was kind of the pitch during COVID, is people thought states would be in a pretty bad position from a budget perspective, and they're going to need iGaming, they're going to need sports betting, and budgets have held up pretty well, so they haven't used that lever of iGaming. But again, at one point, if we do go into a recession, if states need it, it's a very quick way to kind of flip the switch, allowing iGaming. These companies will like it, and from an investor perspective, that's what gets growth going again, and that's what will get stocks moving up and to the right.
So tell me, in these states that have iGaming, what is the market share breakdown between the companies, broadly speaking, combining them all? Break it down for me a little bit.
It's a little less fragmented, and that is because, going back to the companies with casino databases, Caesars and BetMGM, those players who walk into their casino are essentially very similar to those people who will play iGaming. So, a 55-year-old male or female, where sports betting is more of your 35-year-old male. So it's a different demographic. So from that sense, companies with casino databases have actually, if you want to say, overperformed or, over-indexed to what they do in sports betting, because you show up to the casino, you spend $100, you go home. That casino then says, we have you in our database. Why don't you spend $10 in your iGaming app to play some slots? And you're kind of growing the pie there, but you're also keeping that player. From that perspective, though, or kind of to look at the overall pie, DraftKings and FanDuel still kind of dominate iGaming as well. It's just not as much they do on the sports betting side. The model is, DraftKings and FanDuel have these players over here. They can cross-sell people into iGaming within the same app, going back to the horse racing kind of comments of, the more ways you have to offer people a betting source, the longer they're going to stay on. So they're able to cross-sell pretty effectively. But like I was saying, Hard Rock and Fanatics, they have presence in iGaming as well. Some of the smaller casinos in, especially Pennsylvania, who have databases, they do pretty well in iGaming, relative to the size of their overall operation.
So bottom line, if DraftKings and FanDuel have 80% of sports betting in a state, when it comes to iGaming, it might be something like 70%. Is that about the difference?
Yeah, it's about 65% of gaming revenue in iGaming comes from DraftKings and FanDuel, where again, it's closer to 75 or 80% on the sports betting side.
So really, though, when you talk about expansion, just as important, if not more important, than an expansion into California and Texas, is getting more states to legalize iGaming.
I would say if you're DraftKings or you're BetMGM, obviously is state dependent. The more people, the bigger, more revenue. But they would probably want an iGaming state over a California at this point, just given the investment that's needed. Again, it's just about gaming revenue and how many people are there, but from an attractiveness of a business, iGaming is, in theory, what these companies
want. Yeah, you're going to sign up for a few years of losses in Texas or California, right, when you launch, whereas it's going to be pretty much just all upside. You're already up and running in Pennsylvania, for instance, and you're just switching players over, very little cost.
Yeah, I would say that's it. The way we look at this is we look at what's the customer acquisition cost and what's the lifetime value of that player. Your lifetime value of your player in iGaming is much higher, and your customer acquisition costs are much lower. So it makes that player much more attractive when they're an iGaming player.
Quick question about fantasy sports. First quick question. Roughly what percentage of DraftKings revenue is fantasy versus straight bets?
It's a good question. So they don't necessarily break it out. It's a fraction of their overall business now. And for DraftKings, if it's 3, 4, 5% of their revenue, it's going to be a shrinking pool because they don't necessarily care about fantasy anymore. They care about that player, and they're much more valuable on the sports betting side. Obviously, in states that don't have sports betting, Missouri, California, they obviously still care about the fantasy player because at some point they might be able to offer them sports betting. But for them, it's, if it's essentially a flat to slightly down business in terms of revenue, where the remainder of their business, again, is growing 30, 35, 40% on an annual basis. So it's a very small piece of their overall revenue today.
So then it probably,
Well,
the reason I asked is I've heard Prize Picks, who's new to the industry relatively, say that they're the number one fantasy website in the country. And I was kind of shocked to hear that, considering FanDuel and DraftKings. I know they've got a slightly different model, but that's probably correct. Then you would say that, yeah, they probably make more money off of their fantasy than the other guys.
if you want to say revenue into fantasy, I think so. They're a private company; they don't give their numbers, but it's interesting. We actually track app downloads, so the amount of times people download an app, and you can see over the years, really the market share that Prize Picks has taken from FanDuel and DraftKings and some of these traditional fantasy operators. Partly, there's a couple of things going on there. Like I said, DraftKings and FanDuel don't necessarily care about that business anymore because it's more profitable somewhere else, where Prize Picks is kind of drilled down into that fantasy industry and that's their business. So I can't say they necessarily have more revenue because it's not publicly available, but from the kind of the checks that we have, it appears that they might be actually the biggest fantasy company in this country.
Yeah, I don't know how much you're tracking what's going on with enforcement, but they're definitely getting in trouble in a lot of states because it's kind of questionable whether it's truly fantasy versus straight bets, these kind of parlay model betting against the house and so on. And it appears to me that the big boys are going after them. The FanDuel and DraftKings don't like what they're doing. They're calling something fantasy that they don't think is fantasy.
Yeah, stuff goes through waves. And last year around this time, that was the wave of going after the Prize Picks and trying to get them out of some of these states that are, very important for some of the sports betting operators. A lot of that, if you want to call it noise, has gone away. We haven't heard about it in a while. And, now the flavor of the month is going after some of these offshore books, Bovada. A lot of these state AGs are going after the illegal books that are operating in this country. So you kind of see these waves coming and going in terms of, where enforcement is actually going.
Yeah. Okay. Last two quick questions and we'll let you go. One is, I believe I noted in one of your reports that Las Vegas, the city of Las Vegas, gaming revenue hit an all-time record high recently.
Yeah, it feels like month after month, whenever we get this data, it is an all-time high for the month of whatever it's reporting. And it's following COVID, there's a lot of pent-up demand to travel, to get out, to spend. And Las Vegas was, prime example of one of those markets. And really, post-COVID, it never fell off. And it continues to get stronger and stronger, really month after month. A lot of the questions that we get around this industry is, well, are we at top? Are we at the top of Las Vegas? Is it going to be a declining business from here? Just how well it's done in the last couple of years. But, the way we look at it is look at all the entertainment value that has come into Las Vegas the last couple of years. The Raiders, they built the stadium. You get events every single week at that stadium. They're talking about the A's coming into town. The Sphere is now open with concerts that they're selling tickets for astronomical prices. It's bringing in incremental people into Las Vegas. Visitor count continues to go up that, if you want to say before COVID, wasn't there. So in a way, you're seeing kind of this catch up spend and people, wanting to spend on experiences. And on the other side of it, you're seeing incremental events that have maybe fundamentally shifted what Las Vegas is for some people. And it's benefiting MGM and Caesars and Wynns of the world.
Yeah, I mean, the funny thing about it for me is twofold. You've had this massive expansion of gaming across the country, and yet here's Vegas doing better than ever. People would have never guessed that. Vegas was fighting against any expansion of gaming, yet they're doing just fine. And then you've had Vegas kind of turn into this more entertainment center. where gaming revenue was becoming a far less significant to the city than it ever was. Yet, despite all the other things to do in Vegas, gaming revenue is still hitting all-time highs. It's just no one would have predicted that, I think.
Yeah, I mean, I think the big misconception is you go to Vegas to gamble, and gambling is only about a third of revenue from these companies. So the more, visitation drivers that these companies can drive, F1 is the other good example. It was the first year last year. It'll happen again this year. The more F1 type of events you can get into Vegas, the more people you can get into hotel rooms who are then, spend money at, food and beverage and entertainment, and then gamble as well. So it's all fly traps and it's all Velcro, and you just want people to kind of stick to as much as you can and stay there as long as they can and spend as much as they can. And the model, continues to work as we sit here today.
Yeah. All right, let's leave our listeners with one hot stock pick.
I'm going to go back to Flutter. That's FanDuel's parent company. FLUT is the ticker.
And that's even considering the current price, et cetera. You think it's underpriced?
I think there is I think we have a good amount of upside. We have about 35% upside on the stock here. Still think there's good room to run on it. So it's a good stock to own here into football season.
Cool. All right, Jordan, thanks so much for joining us. We'd love to have you back on the program sometime.
Yeah, happy to come back, and thank you.
All right, Jordan Bender, Senior Research Analyst for Citizens JMP. Thank you all for watching and listening to Double Down with Breslo. We'll be back soon with another great episode. Take care, everyone.